Everyone. Kira Mooney, mortgage broker based out of New York, out of Long Island, but servicing all of the East Coast, helping many first-time buyers, investors, and especially the self-employed community as well. So super excited to be here and pour in some good resources to the group.
Awesome. Thank you. All righty. So let me just shrink my screen a little bit. Okay. So let's go through some home buying myths. Okay. And this might apply to some of you. The first myth that we're going to go over is I can't afford to buy a home right now. Is that true? Right? The fact is, if you're renting, you can probably afford to buy a house. So Kira is going to dig in deeper into this myth. So Kira.
All right, let's dive into it. So, a lot of times we get first-time buyers that are currently renting, and one of the biggest myths, like we're discussing, is they believe it's not possible to buy, that they don't have enough in their savings or enough for a down payment. And we're going to dive into the down payment myths later on. But essentially, in this example that you're seeing here, we're looking at the cost to have a mortgage compared to rent. And it seems like it's not that much of a jump, but in the reality of a 30-year mortgage, it's a tremendous savings and benefit from a tax standpoint and from a personal financial standpoint with the owning perspective compared to renting. So as you can see on the screen here, over 30 years, it's a significant amount of money that you're pouring into an asset, into something that you own, that also comes with many tax benefits that we'll dive into later, such as tax write-offs, that actually is going to help you compared to renting, where you're essentially paying someone else's mortgage for them. So we're going to debunk some of these myths. This is just a good visual from a number standpoint. Your $3,500 monthly rental payment can actually become a mortgage payment, and that's going to give you ownership into your own home. So we're going to dive into that further and how we can make that possible for you.
That's really
Awesome. Thank you.
that's
All
really
righty, let's
interesting.
go into our second home buying myth, which is I should wait until the market gets better. And the fact is, no one can time the market. And this quote underneath it is from Kira. The best time to buy was yesterday. So what I'm going to do is give you a little example of timing the market, that you can't time the market. So in 1971, the interest rate for a mortgage was 7.33%. If you waited for interest rates to go down, you wouldn't have purchased a home until 1993. You would have rented for 22 years, paying off someone else's mortgage, waiting for the rates to go down. Meanwhile, the value of real estate quadrupled. Quadrupled. Don't wait to buy real estate. Buy real estate and wait. Does that make sense? Do you guys get it? Now is whenever you're thinking of buying, now is the time to buy. Okay? So I think we debunked that myth, right? Kira, why don't you go into this slide and tell us why it's time to buy?
Yeah, of course. So a lot of times we have a misconception about where interest rates are and if we should continue to wait. So even a few months ago, we had a lot of buyers that continued to wait because they believed that they wanted to wait for the election to settle, they wanted to wait for the holidays to pass. Those buyers actually would have been in a better position if they were to purchase in November or December instead of waiting till now, where we did see a slight uptick through those months in November and December, and now we're seeing an improvement in the market. And I say that to say the interest rates are volatile and they're going to change day to day, week to week. The main thing that we boil it down to on our side, from a mortgage standpoint, is we want to make sure that you can afford the monthly payment. If it's affordable for you on a monthly basis, your purchase price is important, but you're purchasing and you're going to be married to that monthly payment for quite some time, unless you were to refinance. So that's the most important part. The other main benefit is you're going to have an equity buildup, meaning I think we throw around the term equity a lot, right? So equity is just the market value of your home. and you're going to subtract any debt that you have, so the mortgage, and the remainder is the equity. So like Esther was saying, the market has already gone up in value over the last couple of months, years, and historically the market appreciates year to year. It's very, very rare that the market goes down in value from a real estate standpoint. So that equity can help you in the long run. And then a few the other items we're going to dive into later, but the tax benefits are super strong. That can help offset some of your tax liability. And then it's more so stability and security is the biggest thing that I would say is a landlord can turn around and they could sell, and they can also increase rents year to year. Whereas when you have that mortgage payment, it's set. So your income's always likely going to go up year to year, whereas that mortgage payment is fixed and it's not going to change, giving you that stability.
Awesome. Thank you, Kara. Moving on to our last myth. Okay. I can't afford to buy a home because my credit isn't very good. Right. So the fact is, there are a lot of different types of loans out there, and Kara will go over some of that later on. But for all credit levels. So Kira will dive into that a little bit later on. So I think we debunked that myth. Okay. Moving on. I'm not sure if all of you or some of you are aware of the NAR settlement and what that means for you as a buyer, right? But I wanted to give a little brief explanation of what the NAR settlement is. So it first started in 2019 with a major lawsuit. It's called Sitzer Burnett and versus the National Association of Realtors. Okay, so moving forward, I'm gonna whenever I say NAR, it's going to refer to National Association of Realtors. So this class action lawsuit was brought about homeowners in Missouri, and they accused the NAR, along with several major other bigger brokerages, of anti-competitive practices that artificially inflated real estate commissions. So what are the allegations here in this lawsuit? So the first one was mandatory commission sharing, which means NAR rules required sellers to offer compensation to buyer agents in order to list homes on the multiple listing service. Plaintiffs argued that the practice prevented negotiation and kept commissions artificially high compared to lower commission structures in other countries. So the second allegation was lack of transparency. Buyer agents were often unaware of how their agents were compensated or that the commission could be negotiated. The lawsuit claimed this decreased the competition and led to inflated home prices. And the third major allegation in these lawsuits were restrictive MLS rules. Sellers who wanted their homes listed on MLS had no choice but to follow NAR rules, reinforcing commission structures that benefited agents rather than consumers. So what happened? There was this first major lawsuit, and then there was a lot of other lawsuits that followed afterwards. So what ended up happening is in March of 2024, NAR reached a significant settlement to resolve all these class action lawsuits. This settlement had led to notable changes in how real estate transactions are conducted and impacted how it would impact the home buyers and sellers. Okay, so that was a brief explanation of what the NAR settlement is. So let's go into what changes came about because of these settlements. So the first one is signing an agreement. So you need to actually hire an agent and have a written agreement before you tour any homes. Before you, if you were a buyer, before this settlement went into place, and let me just remind you when the settlement went into place and when the changes were effective. It was effective as of August 17th, 2024. So if you were purchasing or looking to purchase a home prior to August 17th of last year, then you might not have had to hire an agent or sign a written agreement before you actually toured a home or viewed a home. But now, as of right now, you have to get an agreement signed with an agent. And I'm going to tell you what type of agent you should be looking for when you're looking to hire an agent. But you cannot tour a home without an agent, according to the new rules. That's the biggest change, number one. Number two is agent loyalty and representation. So prior to this settlement and these rule changes, if you were a buyer working with an agent and you didn't sign any agreement, that your agent who you think is your agent is not technically representing you. That agent is actually representing the seller if you, as a buyer, do not have a written agreement with the agent, with your buyer's agent. So they were always supposed to do what was in the best interest of the seller, even though you were working with that agent. Okay. Then compensation. This is third big change. Agent compensation. The sellers do not need to offer out compensation to the buyer agent anymore. You in your agreement that you sign with your agent as a buyer, there will be a start and end date. There will be a compensation in there, and that is fully negotiable. Many times after this new changes went into effect, the compensation can be negotiated. Sometimes the seller will offer to pay some portion of the compensation. Sometimes they can pay the full amount. Sometimes, if they are not willing to do that, then you have an agreement with the compensation in there, and the buyer may need to pay out of pocket. It all depends on a situation, to situation basis. Okay, but this way, now you're hiring your own agent who's going to be doing what's in your best interest, whereas before it was always in the seller's best interest if you did not have a written agreement with your own agent. Is that clear? Does that make sense? So these are the biggest changes. You cannot tour a home without a written agreement. Moving on. Okay, 5 reasons to work with a great buyer's agent. First of all, it's local expertise. You need to find a knowledgeable buyer's agent who knows what's going on in the business, in your local area. They know all the statistics of that area. They know how to stay ahead of the market, not behind the market, not catching up to the market. They'll always provide you up-to-date information. So with local changes in the area. So that's why you need to find a local expert. Expert negotiator, right? So, great great agent will be able to negotiate very well on your behalf. Okay, if you ever looked for a home on your own and you lost out on properties because there's multiple offers, if you have a great agent who is a great negotiator, then they would be able to actually facilitate you obtaining that home of your dreams. Okay, according to National Association of Realtors, one of the main reasons why someone hires an agent is because of their negotiating skills. The next thing is we solve problems for you. If there's every transaction is very, very different, and every transaction may have different issues and problems that need to be resolved. The agent is going to help and work with the team, and I'm going to talk more about who your real estate team is in helping resolve these solutions to get to a successful close on the property of that you are looking to purchase. Okay, so the agent gets involved in all of this. Accurate property valuations. So when you're ready to put in an offer, your agent will give you something called comparables. You're not going to just go in blind and just say, hey, yeah, I want to offer this. They're going to show you, hey, no, these are the recently sold homes in that area that are very similar to the property that you're looking to purchase. Therefore, and they're going to, and together you are going to figure out where you feel comfortable and where you can put in a competitive bid and offer into the house that you are looking to purchase. Okay. And lastly, closing assistance and beyond. Your agent is going to be there from day one, from when you're looking, doing your search, all the way up to closing and thereafter. They're going to do the final walkthrough with you. They're going to tell you what you need to do on the day of the closing. They're going to actually guide you with regards to, you need to, with anything real estate related. If you need a mover, they're going to help you with finding a mover. If you need a cleaning company, they're going to help you find a cleaning company. And then after you close on that house, they're going to be your realtor for life. Okay, hopefully, if they do a great job. But I'm sure, you'll find a great agent, and this is what you're going to be looking for when you're finding an agent. Okay. Now, let's talk about building a winning team. Doing a real estate transaction is not all about doing one, working with one person. You have to work with several different people to ensure a successful transaction. So we just spoke about real estate agent. That person guides you throughout the whole home buying process, and we're going to go through the process a little bit later. Okay, so that's your first person that you need to find and hire. Then the second person is the mortgage lender. So, Kira, tell us why it's so important to find the right mortgage lender.
Yeah, of course. So with having a lender, it's super key because they're going to help you understand your financial situation, where it currently is. And then based on the areas that you're looking in, they're going to be that guide for you to make sure that they're helping you understand how much you can afford. And if you're comfortable with that monthly payment that you're going to be taking on as a new homeowner. So they're really there to guide you through those steps, make sure you're financially prepared. And then before you go to search for homes, you know exactly what you're approved for and you have your financial information together before you get that accepted offer.
Absolutely. And the next person that we're going to need is our real estate attorney. So we always have a saying, you need to find the right attorney or else, the deal may not go through, right? And we actually have a great attorney with us online when he's going to be speaking a little bit later. And it's so important to have the right attorney who's going to be on your side, protecting you, the legal integrity of the home buying process. And Seth, our preferred attorney, will be speaking to you more about that. Okay. Next, who else is on our team? You need a home inspector, you need insurance agents, and you need a great title company, right? So the home inspector is going to make sure once you find that home that you want to purchase, is going to inspect the house and tell you all the pros and cons about the house, what is needed in the house and what needs to be corrected in the house. So we have several of our home inspector partners that we can definitely recommend when you're ready for that next step. Okay, then you need an insurance agent because you need to insure the new property. We have recommendations for those agents as well. And then the title company. The title company is going to help you understand the history of the property and if there's any open judgments or liens on the property. Make sure the integrity of the property is all there. So, and that Seth, our attorney who's on, will also explain more to you about, okay? All right, let's go through the 6 steps to home ownership. First of all, we already spoke about hiring an agent and why you should hire an agent to represent you on your behalf, right? I think we kind of dug into that. Secondly, you have to secure a pre-approval, which Kira is going to go into more detail about. So you need to have a mortgage lender. So when you hire your agent, one of the first things they're going to do with you is a buyer consultation, and they're going to figure out all your needs and wants and, timing and how much you can afford, all of that. They're going to find out all about your specific criteria. And then with that criteria, they're going to help you find a home. Okay. Once you find that perfect dream home, right? Well, like I said, it's the agent's job to make an offer and negotiate. And this is truly where there's a big difference. If I just want to, I'm just going to share a quick stat. In all of the United States, there's like millions of agents. Only 26% of agents last year did at least one transaction or more. Okay. That means that 74% of licensed real estate agents did 0 transactions. You really need to look into the agent that you're going to hire. Okay. So that 26%, out of that 26%, really, it's going to be a smaller percentage who are really great negotiators. So when you're looking to hire an agent, really do your due diligence. Make sure they're a full-time agent, not a part-time agent. And make sure they're keeping up with everything that's going on in our industry and in their local markets. Okay? So a great agent is going to negotiate on your behalf with your terms and get your offer accepted. Then comes the home inspection process. I mentioned that we have great home inspectors that we're partners with, and we can definitely recommend, and they will tell you what repairs need to be done or how the home is overall. Okay, they're going to look at everything. Then you're going to close and become a homeowner with the help of your lender and all these different people that I mentioned was on our team. And then you're going to invite us all over for barbecue, right? So that's the 6 steps to home ownership. Now, Kira's going to walk you through the steps of the mortgage process. It's all yours, Kira.
Okay, let's do it. So what we'll start with is what actually is a mortgage broker. I think a lot of terminology gets thrown around the industry. So basically a mortgage broker compared to a banker or any other type of institutional lender is we're essentially going to be your personal shopper. So there's over 15 to 20 different lenders that we work with. The main benefit to you is we're boiling it down week to week to see which lender is providing the most competitive interest rate and closing costs, incentives, and any grant programs to help you as a first-time buyer. Once we boil that down for you, we're going to pair that with you and we go over that with you during a consultation to make sure that you understand the products and the offerings that we have available for you. And then we're making sure that you're receiving an interest rate that is most competitive compared to the various different lending products that are on the market. Because at the end of the day, our goal is to help you save as much money as possible and get you into your new home quickly and as efficiently as we possibly can.
Awesome. Next.
All right. So start to finish, this is what you can expect from the lending side. So that first step is you're going to get your pre-approval, and we're going to dive into that and how you obtain a pre-approval. That's really going to get you to be able to start your search and start looking at homes as you understand where you are financially and what you can afford to purchase. As you sift through the market, you're going to look with your agent, and your agent's going to really be that champion for you in negotiating and making sure that they're getting you an accepted offer, especially in a competitive market like the various boroughs and on Long Island. We want to make sure that you have a very competitive agent that knows the market well to get that offer accepted for you. From there, you'll transition into working with your legal team and your attorney, and they're going to help you draw up a nice bulletproof contract that's going to protect you as the buyer and make sure that everything is firmed up and agreed upon by both parties. So fully executed means the seller is agreeing to the terms and you as the buyer agreeing to the terms as well. Then once we have that contract, we take the baton back in the mortgage world and we're going to get your loan submitted into what's called underwriting. All that means is they're doing extra due diligence to make sure that you have the financials in place and that you can afford to purchase the home through that underwriting phase. So they'll order the appraisal. The appraisal is basically just a third party, non-biased view of the value of the home. So anyone can say a property is worth $1 million. The seller might believe it, you may believe it, and your agent might believe it too. But it matters what the market is actually showing us. So they look at what recently sold in the area, and that's how the appraisal report is being populated with the data, because they're looking at the different homes that recently sold and they're giving you an accurate value as to what the home is currently worth. From there, you'll get your approval from underwriting. They're going to firm up some conditions. They'll ask you for some additional pay stubs, make sure that, again, that you can make that mortgage payment each month. And then once you get that clear to close from the lending side, that's when we get to coordinate the closing and the fun part with your attorney. And we make sure that the seller agrees, the buyer's side is agreeing to a date. And then that's when you're going to sign and get your keys. And then you're going to invite everyone over for that barbecue.
That's very important.
Most important part.
All right, we celebrate. So, pre-approvals. What do they need?
Yes. So for a pre-approval, the main thing is if you're working for a company, meaning you're working for someone else, the basics are going to be, we're going to want to see your most recent 30 days worth of pay stubs. This allows us to understand that you're actively working and then how much you're bringing in each month. The W-2 statements are just tax statements. That allows us to show the underwriting team and the lending team that you have a history of working. We do that by showing them your tax statements, that you have a history of working elsewhere or with your current company. A form of identification, so whether that's passport or a driver's license. And then we ask for bank statements so that we have an understanding of how much you're working with for your down payment and your closing costs, so that we have a clear understanding of how much you can actually bring out of pocket to go into the home. From there, we do a review with those three variables that you're seeing on the screen. So we look at income, how you're going to pay back that mortgage each month, your assets, how you're going to afford the down payment and closing costs. And then your credit is basically your debt profile. So we look at credit to make sure that we understand, do you have student loans, do you have credit cards? What does your debt profile look like? And then those three things together allow us to brew up and make sure that we boil down that perfect number for you as to what you can afford.
Okay, next. The different loan types, let's break it down.
Yes. So in terms of loan types, the most popular that you'll see or hear about is conventional. So these are your loans that are backed by Fannie Mae and Freddie Mac. And then the second one is through the Federal Housing Administration. That's your FHA loans. Those are government loans. Basically they're fairly similar in terms of the speed and how quickly you can get a mortgage. The main difference is related to the debt profile. So to keep it very simple, FHA allows for a little bit more debt from a buyer to exist, whereas conventional is a little bit more conservative and a little bit more strict as to how much debt you can carry in order to be approved for a home.
Okay. And remember, we talked about credit. So who qualifies?
Yeah. So credit is super important. And as you're getting ready to buy a home, I would say this is the biggest thing that you want to hone in on and make sure you're in a healthy credit standpoint. So for credit purposes, we'll transition into down payment from here, but for credit, as low as 580 credit score will be able to get you into an FHA loan. It goes lower than that, but as just a general baseline for simplicity purposes, 580 and above, that qualifies you for the government loans, and you can do as low as 3.5% down. Conventional, again, you can go lower than 640, but 640 is really the standard and the baseline for conventional mortgages. And you have the ability to go as low as 3% down. With credit, the main thing is, even if your credit isn't super strong, we have software on our side where we work with our clients to show them, you might be here, you might be at a 500. This is your plan forward to boost up that score to get you to that 580. So it's never just, we like to say we play chess, not checkers, because it's a long-term game and it's a long journey to get into a home. And you want to make sure you're working with a team that's going to give you that plan and not just say you're approved or you're not. It's home ownership is a very large purchase. And we take it very seriously. So we want to make sure we're setting you up for success, whether that's with credit or helping you budget for a down payment. And then just to touch on VA quick, if you're a veteran or if your spouse is, they have access to 0% down, and you would just have to worry about a portion of the closing costs, but your down payment, you could do zero down as well.
Okay. So pretty much, you covered all credits, right?
Yeah.
Self-employed and investor loans. How's that work?
So self-employed and investor loans are super fun. A lot of times we get buyers. Another myth is like, if I'm self-employed, I can't afford to get a home. I can't get a mortgage. So even our cash businesses, our restaurant owners, hair salons, we're able to qualify them. We have various different loan programs, and the consultation allows us to boil down what makes sense for you based on your business. But in short, we have business bank statement and profit and loss statement, amongst other loans that really help the business owners qualify through non-traditional income sources. So instead of showing pay stubs or tax returns, they may be able to show us a business bank statement or a profit and loss statement through their accountant, and that's still going to help them qualify for a home.
Wow. So a lot of people couldn't actually get a loan, right?
Yeah.
All right, so let's introduce Seth Ben Ezra, who is our preferred real estate attorney. So Seth is going to go over some the process of the real estate on the legal side of it. So Seth? He's on mute. Okay. Seth? I know he's there, but he's on mute. So while we wait for Seth, because maybe he's just stepped out for a second, is there any questions?
I have a question for Kira. So, when buyer says, I'm gonna be shopping around for lenders, what do you say to that? Because there are definitely a lot of buyers saying, I have my pre-approval from Chase, but I think I'm gonna continue shopping.
Mhm.
What do you say?
Yeah, I mean, shopping is strategic. On our side, we take the legwork out of the shopping just because we work with so many different lenders. And especially for on the broker side compared to a banker, banks typically have one set of rate sheets, and once you lock into your rate, that's basically your agreement with the bank and you have that rate. Whereas with a broker, even when they're locked, if the market is to change, which it frequently does within the last 6 months and year, we've seen a very volatile market for the good and the bad. We're able to float down that client even after locking into a strategic rate if the market improves. So I really think that's the biggest value add is you're never stuck with one product with us. So we have a lot of flexibility to, at the end of the day, always help the consumer benefit from a cost savings.
Good point.
Okay, so we have Seth.
Sorry
So
about that.
Seth, can you walk us through the transaction from a
Sure.
legal standpoint?
Yep. Yeah, and sorry about that. I was being careful to be muted before 7:45, so I'm here with you guys. That was awesome. And Kira, you brought up so many good points. The last one especially, though, being able to lock your loan and protect their borrowers from the downside of the market rates going the wrong direction, but yet give them the flexibility to benefit from rates going in their favor is one of those things that should be too good to be true, but I know you can do it, and that's really cool. So, first and foremost, and you guys have both pointed it out, the most important thing in buying hopefully the biggest asset of your life is building a good team. And you've seen already how important that is. And unfortunately, from our standpoint, one of the things that gets overlooked is the attorney. For years, you guys have heard me talk about people who just say, no, it's okay. I have my mother's, uncle's, sister's, aunt's, best friend's divorce attorney, and they can jump in. So it's not easy to become an attorney necessarily, but once you do become an attorney, there's really no bar to what your attorneys can do. So I've chosen to spend 30 years as a real estate attorney. So that's, we say you want 10,000 hours to become a professional. That's about 80,000 hours at 50 hours a week, learning just one craft. This is all we do. I can also, unfortunately, represent you in your DWI conviction or your DWI case and hope it goes well. There's nothing that stops me from doing that. that doesn't mean it's a good idea, right? So it's really important to pick the entire team, including your inspector. We've seen like friends, firemen, people who know a lot about homes do inspections. Bad idea. Same with a real estate attorney, and you wonder what might go wrong, right? So, we're here to make sure that you get everything that you need, as much of what you want as possible. Keep your down payment protected. It's pretty easy to end up doing things wrong, miss some important points in the contract, and risk your down payment. That's that for the majority of people that we work with, for just about everybody, really. Losing your contract deposit is life-changing. And there are so many nuances in a contract, so many things that can get missed, that if they're not negotiated properly, if we don't understand your needs, if we don't know the exact mortgage that you're looking for, and if we don't keep you on track for how long you have to apply for that, how long to get it, it's entirely possible that timeframes pass, that you end up with either a declination or a problem, and we don't have you protected. So it's our job to make sure that you don't lose your deposit. Okay. In negotiating the contract, we also want to make sure that you get the things in the contract that you want and that you expect. We've had all kinds of circumstances where, maybe the attorney doesn't ask enough questions and the seller takes things with them that the buyer didn't expect, or they leave things that the buyer didn't expect. All of those points, which are subtle and critical, need to be in the contract. No matter what was told to you, what was negotiated, if it doesn't end up in the contract, it doesn't exist. So it's really the attorney's job to work with the realtor and with you guys as the buyers to make sure we understand what your expectations are. And then we also set out expectations for you guys. So one of the biggest things that we see is negotiating timeframes, right? People in New York don't necessarily understand how complicated, how difficult it is to target a specific closing date. Now, that matters for a lot of reasons. It matters because you're trying to lock your interest rate. If we have a contract that doesn't protect you in terms of your timeframes and your interest rates not locked far enough out, it can end up being extremely expensive, thousands or tens of thousands of dollars to keep your interest rate, or risk losing your interest rate and maybe not being able to afford the house, which could actually lead to you losing your down payment. So the things that can happen from small things that are missed are tremendous. So we're there to make sure you don't lose the house. We try to negotiate the contract extremely quickly. We'll typically have a contract reviewed and have comments back out within 24 hours of receiving it at the most. An interesting thing about choosing to just be a real estate law firm is our firm actually has no voicemail here. If you call during the day, somebody just answers the phone, because when you call, you don't want to leave us a message. You want somebody who's going to pick up the phone and answer your questions. And if I'm a litigator or divorce attorney or your DWI attorney, chances are I'm in court or I'm sitting with a client, not just focused on your contract. So that's really important. So we don't want you to lose your deposit. We don't want you to inherit other people's problems when we're negotiating the contract. We want to make sure that what we protect you from are things that might have been there earlier. Now, that could be title problems like Esther mentioned. So we, unlike many attorneys who are afraid to end up with a cancellation fee for a title order, we order your title report on day one, your title search. Day one, contract is signed, title search is ordered. Within 7 to 10 days, we have your title search back. Now, if we've got a 30 or 45 or a 60-day closing window, I now have 40 or 50 days to start solving title problems with the seller's attorney. If I wait until you've got your mortgage commitment to save a few dollars, now I have a very short period of time to start working with the seller to clear up maybe an old mortgage that never got satisfied from the 1970s. It happens all the time. Or maybe the seller had some deed transfers that went on between the family for whatever reason, sometimes for good reasons, sometimes for bad reasons. So we need time to get that stuff figured out. We don't wait, we do it on day one. What are we looking for with title problems? Title problems can be anything from, we just had one where they opened a permit for a second story. They never built the second story. The sellers thought, no, it's no big deal. We didn't build the second story. It's okay. We just tear up the paperwork. Well, it was 90 days of inspections and, fixing and filing updated permits to withdraw the permit for work that was never done. Well, if your rate lock is pending on that, or if you're selling your house or your apartment, your lease is up, you have all kinds of issues. You're homeless. It's stressful. You may lose money. You may lose your interest rate lock while the seller's clearing up problems. So it's really important for us to ask questions, do our title search, and find those things out as soon as we can. We'll also ask you to order a survey, or we'll do it for you, but we'll order a survey. We want to see what the boundaries look like of your property. We want to make sure that your neighbors don't have a driveway or a shed or a garage built on your property. I just had one with a 3-acre property, and there was a very, very nice, probably $30,000 or $40,000 pool house built 20 feet into my client's property towards the end of the property. They didn't know that. So the neighbors had no idea they had bought a property with a pool house on our property. And my clients had no idea that they were going to end up with a chunk of their property missing. So again, we'll order title, we'll order a survey. Part of negotiating the contract also is making sure that we've covered you for what happens in the event something breaks, right? When you see the house, everybody says it's as is, but it doesn't really mean as is. So a seller expects you to buy a house in its as-is condition. That just means they can't be expected to go paint the house or put on a new roof or update something that still works. But when you see the house, if the air conditioning and the stove and the microwave and the refrigerator are in working order, we also expect that when you get to closing, those things will be in working order. But if that's not in the contract, then it's not quite clear what it means, because every contract states that you're buying the house as is. So lots of points to be super careful about when we're negotiating your contract from that standpoint. Other things that we'll walk you through are non-contingent offers. People will very often hear the term all cash, right? In a very competitive buyer's market, like we had with seller's market rather, like we had with COVID, buyers were making offers all cash. Well, what does that really mean to you? Does it mean that you don't need Kira and you're just going to come with a barrel full of money? No, it most often means that you're willing to get into this contract and risk your deposit, even if you can't get a mortgage. So more important to know at that point that your realtor's good, that your comps are good, that your realtors put you into a home that makes sense financially, and that you've got a mortgage professional to work with who can get you a mortgage and not risk your down payment. So that's all cash versus non-contingent, meaning you're buying a property without the contingency of a mortgage to protect you. Also has to be very carefully negotiated into the contract. Other things that we'll look for are timing as far as the seller. Is the seller able to get out of the property the day that you close or the day before that you close, so that you can go do your walkthrough, look at everything, get the keys at closing, and move in? But very often in New York, there's a domino effect. Your seller can't move because they don't have the money from your purchase. And now you need to get them the money so that they can go on to their next closing. Well, how do we keep you protected when a seller is going to stay in your house for 5 days? That's a challenge. And if it's not thought of because you've got, somebody who hasn't done this thousands of times and hasn't had the challenges of those things, then you're left unprotected and disappointed. I want to make sure I'm within my time frame, so just let me know if we're not, Esther. Another thing that's really important.
Keep going. You're doing great.
Thank you. The other thing that that is really important and where we find people's frustrations, there's two really big things. One is that 30 years of doing this, I have seen, we represent a lot of lenders, and then when I'm the bank's attorney out of closing, I get to be more of an observer. And one of the things that I've seen thousands and thousands of times, and I mean that literally, is buyers who are at the closing table who are in a complete panic because they haven't understood their closing costs. Now, with TRID and some of the new regulations and with good loan officers, they're much more aware. But what we do is we have what's called a CCA, a closing cost analysis. From the minute we meet, we will start to prepare I actually sent an email, but I don't have it up on my screen. It's a very detailed closing cost analysis. And it's really a closing analysis. We're going to provide essentially an exact number the day that we start talking about your purchase for what we think you'll need to come to the closing table with. Now, your realtors will give you some numbers and your loan officer will give you numbers, but they're all sort of hamstrung by certain things that they're allowed to disclose, forced to disclose, and not allowed to disclose. So for instance, you'll see certain taxes and transfer taxes and things that lenders have to put on their closing disclosure for you or their loan estimates, and they're not necessarily accurate, and they require your loan officer to explain very carefully why those things are there and why they might not be right. So what we do is we incorporate every single thing that we can think of that you will need in order to show up with your last check or wire the day of the closing, okay? And then we compare. For 30 years of doing this, we've actually compared our numbers and constantly kept track of where things can be slightly off, and we tend to be within literally a few $100s on even multi-million-dollar closings. So it's really important that from day one, we've given you the expectation of exactly how much money you'll need to come to the closing table with, okay? That's that. The other thing is we'll walk you through, how do you get the money to closing? How do you get the money for your contract deposit? One of the problems that we all see, Esther's team, Kira's team, and myself, we have buyers who have their money tied up in online investment accounts, and people lose their ability to purchase the property, because in a very competitive market, we'll get a contract negotiated in one day. Let's say you find a house, we get the contract, the deal sheet in from the realtors, we get your contract negotiated, and we say, okay, it's time for your 10% deposit, right? So your down payment is how much money you actually hand over to the seller's attorney to hold as the seller's protection for you to go through with the deal. Well, if that money's tied up in an online investment account, very often it takes 3 or sometimes even 10 days to get that money out of an account and into an account that you can wire from. So we've seen people lose homes. They move on to the next buyer because everything's been done, you're negotiated, everything's ready to go, and you don't have the funds to put together for the down payment. Okay, that's really important and really upsetting and sad to see a buyer lose a property because of that. So make sure that your down payment funds are available and ready to go, whether that's 5% or 10% of the purchase price. And please keep in mind that down payment from our standpoint as a contract, the person getting you into contract, is how much money you will put down with the seller's attorney to hold the transaction open. Okay. That's it. And then we'll prepare you for the final walkthrough prior to closing. You'll do that with your realtor. Make sure that everything that was in the contract is still in the same condition, so that when you see the house for your walkthrough, you know how to compare, and let us know if there are problems before the closing so that we can address a stove that might not be working, or a window that was cracked by the movers, or something like that. And we can either hold money in escrow or get a credit to repair the item.
So,
Jump in and take questions. If that's
yeah,
what you would like to
I
do.
just want to give a shout out to Seth, because he is an amazing attorney. He really does go above and beyond to really, secure the deal and make sure that it goes through smoothly. He is one of those team members that we definitely need on our team, right? And not that Kira isn't. Kira is another one that we really need on our team. So definitely, if you have any questions or you need a great attorney, Seth is the one that you need to go to. So let's get into some questions. I don't know why my screen is stuck. Okay, there we go. So are there any questions, Augie?
At this time, if you do have a question, we're going to give Marcello first shot at the questions, because he was here at least 10 minutes early. Marcello, if you do have a question, please feel free to open up your mics and ask away. And I do have some camera shy people that I have some questions for. Okay, maybe he's camera shy too.
Okay, so let's go with the other questions.
All right. One question is, how long does the whole buying process take?
It all depends. It all depends on how motivated you are, actually, and it depends on your time frame, right? So some people may be relocating for a job, and they have 6 months to get there and start their new job and find a home. It all depends on the situation, specific situation. If you either have something to sell, or then we have to get that sold and find you another property to go to. If you're relocating, we also have relocation services. We have agents all across the United States that we have vetted and can work with you if you're going to any part of the United States, and even possibly overseas, because we have a global team in our Integrity Core Realty. So it all depends on your unique circumstance. If you need to find a home within 3 months and get into it, then we can definitely do that, right? If your time frame, I remember I sold a house, and the owner was only willing to take somebody that was willing to wait 9 months until their home was ready to their new build was ready, right? So it all depends on your specific scenario, but our agents can definitely support you. And if you use Kira and Seth, they'll make sure that we get it done in that specific time frame that you require.
Awesome. Got a question from Marie. Once I am in contract, how long do I have to wait to get the keys?
Again, that will all depend on your team that you put together, right? Remember, I mentioned that we have it's not this real estate process. It's not just one person doing the whole thing. It's, you can see that there's 6 different individuals that need to all collaborate and work together as one team so that we can get the transaction done. There have been occasions where, you know, it wasn't the right team and maybe one person would like slow up the whole process. So it's so important that you get, every member of your team is all working together and collaborating and to expedite the process.
And that's what a good buyer's agent will do. He or she will organize the whole team and make sure they're flowing and gelling.
Absolutely. Absolutely.
All right. I got a question here that they were a little confused about the you know, you having to use an agent. So if they just walk into an open house, can't they just use the agent from that?
Yes and no. So what ends up happening is if you go unaccompanied without an agent to an open house, basically that listing agent who fiduciary duty is to the seller, that listing agent can work with you, but they will let you know that they're not representing you, so you won't have your own representation. Their interest and fiduciary duty will always be to the seller, but they will let you know that they will work with you, and so pretty much, you know, they're going to do what's in the favor of the seller. Okay, so what I would recommend is hiring a buyer agent so that you have your own representation.
It's like going to court and having your own lawyer.
Yeah. No, you don't want to share that lawyer.
No, you
That's
don't
the
want to
other
share the lawyer
side.
from the other side, generally speaking.
You know?
Even if he is as good as Seth is, you know, you still don't want to share. All right, we
Yes.
have one more. And this one's going off to Kira. What happens if I have a if I get a mortgage now and the rate's like, you know, 6.5 or whatever, 7% as it is now? Am I stuck with that rate for the next 30 years?
You are not. So when you close, you can depending on the timeline, I always recommend doing like a consultation with your mortgage lender to see if it makes sense to refinance. A lot of lenders will market refinancing as free, but it's not free. Refinancing comes with a cost, especially in New York. You want to make sure that it makes sense to refinance before doing so, but you're not stuck with your rate. You can refinance typically anytime after 6 months, but it really has to make financial sense for you. So make sure you're consulting with a good mortgage lender to make that determination with you and think through, you know, if it's viable or not. And then the other thing I would add is there's something called recasting. Your rate won't change, but if you need to change your monthly payment, if you come into a larger sum of money, such as a bonus or a settlement, you can recast your loan, and that will reduce your principal balance and in turn reduce your monthly payment if you needed
Awesome.
to, even after closing.
Awesome. Awesome. That's all the questions I have right now, Esther. If again, one last call, if you do have a question, please feel free to open up your mics or put in the chat or send me smoke signals, whatever of the 3 ways I could get them.
I just want to point out that I know a lot of buyers like to, if they're part of a union, their union would provide them with an attorney. I would always say, don't use them. Tell the union, you know, I'm going to use my own, your own attorney. And typically the union will give you a credit for using your own attorney forever, whatever amount it is. If I was going to use an attorney, I would always use a real estate attorney because most union attorneys will provide you with a general attorney, and that attorney may not have the experience like Seth. If I was going to buy a home, Seth would be my go-to person. If I'm going to get a divorce, I would not use Seth. So I would specialize in using
And Seth would
someone
appreciate that.
because I don't think he's
Agree.
going to work on my behalf to get me as much money as I want from my husband.
There you
But
go.
that being said, always go with someone that specializes in their, you know, in their field. So that's my 2 cents about using an attorney. And I've
And
had multiple cases where they do end up using the attorney and they have no idea what they're doing. And even though they've done 1 or 2 transactions in real estate, I don't think they have the tools in their shed to help the buyer. So always go with a real estate attorney.
A
and
lot
to
of
support.
times, people are referred to by their friends or, relatives, right? Or their sphere of influence. But like, let's just say, and I had this situation where they referred me as the agent because they actually knew me and had a good experience with me. However, they also recommended an attorney at the same time. Didn't And we couldn't, as agents, we couldn't really say anything about the attorney because I couldn't say anything because that person was referring me, and also along with that person was an attorney. That attorney, later on we found out, was not a real estate attorney, was a litigator. So they fought us from beginning to end, right? And at the end of the day, when it came to closing time, right, we scheduled the closing, and what ended up happening is that attorney didn't know how to calculate the closing costs. So we're all there ready to close, and they said, "Oh no, we can't close." And at the end of the day, we had to figure it all out, working around the attorney, the mortgage, the lender, the two agents that were involved in the deal, the buyer and seller. We all worked around that attorney's number to finally get the thing closed, right? But it was a nightmare from beginning to end because he was a litigator. He was just out to just dispute everything. So just keep that in mind. You need to hire a real estate attorney, and a good one. You need to hire a great agent and a great one. You need to hire a great loan officer, and and we have all those people in our network here. So the last thing I wanted to say is, okay, how come I can't? All right, is if you want, I don't know who recommended you to come to this webinar tonight, but if you wanted to reach out to Kira or myself, you can actually reach out through this QR code. You can just take a screenshot of that and reach out through that QR code. If somebody from our team, our Integrity Core team, had invited you to this webinar, then please go back and talk to that agent that recommended you, right? And also, if you wanted Seth's contact, you can just scan that QR code there, and Seth can definitely help you with your real estate transaction. It is now exactly 8 o'clock, and we're right on time. I respect all of your time, so we did well. Thank you to Kira and Seth and everybody that's joined us tonight, and I hope you have a great evening, rest of your evening.
Thank you so much.
everyone.
This concludes our
Bye-bye.
webinar. We appreciate everybody joining us, and as always, all the best to your success. Be well.